Hello, my name is Rahim. Today I'm going to share how to choose the perfect property strategy for you. The one that is suitable based on your goals, what you want to achieve, time and experience that you're starting with. This video will help you choose the perfect property strategy that will help you achieve financial fortress for you and your family for generations to come. And how to focus in whatever property strategy you choose and be laser focused in it. When I started, I wanted to do so many property strategies, but what I did was to set my goals and understand where I was and focus in one strategy. When I started, I know I don't have enough money. I don't have enough experience investing in property strategy. So what I did was I focused in one strategy, which was rent to rent. And I immersed myself in that strategy before I move into other strategy. But in this video, I'm going to show how you could choose that perfect property strategy based on your financial situation, as well as your circumstances and the experience you have in property investment. So there are 7 strategies I would like to share with you. In a moment or two, you will see these strategies on the screen. So let's start with family let, often known as buy to let. It is a property, not one bedroom flat, not bedroom flat, it's 3 or 4 bedroom house. Located in a perfect area where you could generate cash flow. Okay, so the reason why I choose 3 to 4 bedroom, again, I will explain this to you in other videos. Okay, so if you bought a 3 or 4 bedroom house, you can then rent this property out to a family under one tenancy. So again, this is a very simple strategy. It's very easy to understand and also it's a very good way to generate steady cash flow. Because what you would do, you would paint and decorate the property if it needs to be done, and then you can rent this out to one family under one tenancy. It's very easy to manage. You could manage it, or you can get an estate agency to manage it for you. The good thing is, once you've got 3 or 4 bedroom property, you would have tenant that will stay there for a very, very long time. We usually call this sort of tenant lifers. And this sort of strategy is suitable to an investor, someone who wants property to be passive income for them rather than doing all the works and all the rest of it. And the good news about this also, it doesn't have to be local to you, but you want to make sure the figures adds up and the property generates net positive cash flow. It could be anywhere in the UK. You could invest anywhere. It doesn't have to be local to you. Just like when you invest in an Apple share, you don't even know where the head office is in some occasions. But however, you do know investing in Apple based on your analysis and knowing what the forecast what the forecasts are for the company. You believe that the team that company hired will be able to manage the shares and generate you dividend in the near future. Exactly the same thing when it comes to property. It doesn't have to be local to you, but if you know what the golden rules are or what you need to look for before investing in these properties, there will be one of the best ways to generate you passive income. Right. So that in a nutshell, that's what family let. Again, this is just a brief about this strategy. It will take you a couple of days or so to learn this strategy. If you want to learn this strategy and get in-depth knowledge on how to execute this, again, join me in my property courses where I spend a couple of days to teach people how to execute this strategy. Okay, let's go on to the next strategy. The next strategy is what we call HMO, house in multiple occupation. This is a house, usually 5 bedroom house, kitchen, common area, and maybe 2 showers. Okay, so this is bedroom 1, bedroom 2, bedroom 3, bedroom 4, bedroom 5, and we have the lounge, we have the kitchen, and obviously we have the toilet here, right? So this is a house is where you have 5 tenants sharing the common areas, and each has an individual room in the property. So each tenant would be paying you rent for staying in that specific room, and all the tenants share the communal areas as well as the facilities. Okay, renting an HMO, you would target different sort of clients. We have different type of market. We have the high-end market. High-end market, you mainly target managers, people who are contracting out to work in a city or a town, or they've got project going on, so they only need a room for 5 days a week to stay whilst they're working in the contract that they have. And the other segment would be professionals. Professionals are people who just graduated from universities, or people who just started working in a professional environment where they don't really need to have fancy or high expensive furniture in those properties, but they just want a place where they could stay until they raise a bit of cash to be able to buy their own properties. We have another segment, the student market. The student market is a very good market if you want to invest in that sort of strategy. The only thing that you need to worry about is basically you may have voids during the school holidays, as well as now you can see most of the universities are building high-rising properties to accommodate their own students. Again, if you know what you're doing, you will be able to target those sort of tenants that will be able to pay you your rent. So let's talk about how to manage and how we could make cash flow from this sort of strategy. So bedroom one will pay for your mortgage, right? Bedroom two would pay for your maintenance, right? And bedroom three would pay for the bills. Again, if you're renting HMO, usually the rent includes all bills: electricity, gas, internet, council tax, and cleaning, TV lights, and all the rest of it. So you would have to pay that on behalf of your tenant, because obviously they're all sharing the facilities and they're all using different sort of energy consumption. So that bill would have to be paid by yourself. So the room 3 would go for the bill, and room 4 gets you to break even. I.e., it's like when you have a family-let property. Basically, it gets you the same amount of money you would have get if you were to buy a property and rent it out to a family. Bedroom 5 is what generates you the profit. So bedroom 5 will be your profit, would be your profit bedroom. And again, the reason why I like this strategy is because it generates lots of cash flow. If you rent all 5 of this room, you're making lots of money out of that property. And the thing to aware about is about this strategy is it is a job, right? I know people will say, oh, it could be an investment. Of course it is an investment, but the trouble is, it's very difficult to have an agent who would manage a HMO property effectively and generate you handsome cash flow. If you have an agent who tells they will manage HMO property for 10%, is because they've only just started, they're wanting to get lots of clients, but as soon as they realize it's costing them money, they will just hand the property over to you or basically stop managing it for you. So a good letting agent will charge you anywhere from 14 to 16% management fees. And again, if you hand that property back to a management agent, that's your 20% profit gone. So on the 20% profit, you will not be making lots of money in that sort of strategy. So if you are investing in property like this, you want to go into HMO investment strategy, you need to ensure it is local to you, right? You could manage it, you could look after it. You know, that's the way you would make a lot more cash flow instead of handing it to a management agent who would probably not look after it the way perhaps you would have looked after it. Again, this sort of strategy is a job, right? It is a job. So again, if you're looking for a passive income, you would not consider this sort of strategy, because you want a strategy that would allow you to go on holiday, the time and day whenever you want to go on holiday. But whereas if you're doing this sort of strategy, you'd have to be nearby to ensure it works and you can manage it. If anything goes wrong, you could absolutely look after it. And again, in average, it takes about 2 hours a week in average to look after these properties. So it's not really it's not when you have a full-time job where you work from 8 to 6. So again, this is HMO, and again, for you to understand this sort of strategy, again, I usually spend a couple of days to go through this strategy with my students to ensure they know exactly what they're doing, and they know, most importantly, where to get this sort of strategies, because you don't want to buy a HMO property in the wrong location or the wrong town or city, and you don't even know what to do with it. Again, in my advanced courses, I go in depth on this strategy to ensure that you know what you're doing, and also to understand whether that strategy is the best strategy for you, and it is the strategy that you would like to take advantage of. So we've gone through buy to let. We know buy to let, it is not a job, it's an investment. So i.e. you can buy it anywhere in the UK, you can fix it, set tenant there, get an agent to manage it, and you go away, enjoy your life, go on holiday, do whatever you want to do. You don't have to worry about it. The second strategy, investor. The second strategy, HMO, we know it is a job. One, it has to be local to you because you want to make the most out of the cash flow. Secondly, it may need about a couple of hours or so a week to ensure that you are able to manage it, and if any issues comes up, you could look after it. So let's now move on to the next strategy. This is my favorite strategy, rent to rent. Rent to rent is the process by which an investor would rent a house from a landlord, usually a tired landlord or landlord who's struggling to manage their property, on a guaranteed rent basis. So you take on that property from that landlord and rent it out to other tenants. We have different type of rent to rent. We have rent to HMO. We have rent to service accommodation. Again, rent to HMO is when you acquire that property, usually 4 to 6 bedrooms, right? And then you rent that house up room by room basis. Suppose we secure the rent to HMO somewhere, let's say perhaps in Birmingham. We secured it for 1,200. The 1,200 is what we would pay to our landlord for taking on the property of them and provide them the guaranteed rent. So what we would now do basically is to rent this property room by room basis to either working professionals, student, LHA, people who are on benefit, or going for the high end, renting it to managers or director who are contracting in that city. So usually in places like Birmingham or so, you could rent this property out anywhere from 400 to 435 pounds a month. So let's assume it's a 6-bedroom house and we are renting it out for 435 pounds a month. And let's see what the rental income is. So if it's 435 pounds, if we times that by 6 bedrooms, that would give us 2,610 pounds. So that would be our gross rental income that we receive from renting this property out room by room basis. Okay, so let's work out our cost. We know we are going to pay our landlord 1,200. That then gives us 1,410 pounds gross profit. So what we now need to do, because we will be renting this property room by room basis, so we are responsible to pay the bills like electricity, gas, TV license, broadband, and all the rest of it. So that may cost us about 510 pounds. So if we deduct 510 pounds from 1,400, that gives us 900 pounds profit. So 900 pounds will be our profit, right? So if you times that by 12, that's roughly about 10,000 pounds. So we'll be generating 10,000 pounds in a property that we don't even own, right? And when I do my courses, if I ask who wants to earn 10,000 pounds in a property that they don't own, you can see lots of hands going up, right? So these are the sort of strategies that you could take advantage of to raise cash flow. And it's one of the strategies that you could use to quit your job in a very short period of time. I used this strategy to actually quit my job. So I was able to execute it nicely. Within 6 or 7 months, I was able to sack my boss and go into property for full time. But again, it's because I wanted property to be my job. I hated working for someone to make them grow I wanted to work for myself and make myself grow. But when I initially started, I thought it was an investment. It was an investor strategy, only for me to realize it is a job. Hence the reason why I quit my job and focus in doing rent to rent full time. And that enables me to be financially free and concentrate in property full time. So tell me, how can you not execute this sort of strategy that would generate you £10,000 a year in a property that you don't own, and at the same time allow you to live the sort of life you want to live? Okay, so we now know rent to rent is a job, right? And again, this sort of strategy needs to be local to you because you have to manage it. There's no point to secure a property that is in Birmingham and you lived in Cardiff, you expect to make money for you. It won't make that much money for you. So it is very important for you to choose something local to you. Again, this is what I call, this is literally the strategy I use to get me to financial freedom. So again, I run a couple of days courses to focus in that sort of strategy that would enable you to execute and use it to get you out of the job, out of the rat race if you don't really like what you're doing, okay? And there's also another strategy on the rent to rent, which is rent to service accommodation. Again, it's a very similar sort of way to do it. The only difference is you're renting an apartment or a 2-bedroom house instead of 6-bedroom house, and you then let that property out on a short-term tenancy to event goers, contractors, etc., etc. Again, it's a strategy I would like to talk about, but because I don't have enough time to actually go through it, I will do a separate video to talk you through about how rental service accommodation works. Okay, so we've got our buy to let. We know it's an investment strategy. We've gone on to HMO. We know HMO, it's a job. And number 3, we know rent to rent is also a job. So if you're going to invest in this sort of strategies, you need to ensure that you have a couple of hours a week to manage these properties. Again, it's a very good way to quit your job and do property full time. Okay, let's look at the 4th strategy. The next strategy is option. Some people call it purchase lease option. This is the process by which an investor secure a property at today's price and pay for that property sometime in the future. In a simple term, it's when you agree to buy a property, say for 100,000 at today's price, for say 5-6 years down the line. Again, what you then do, you then get that property off that landlord or that owner and then rent that property out to a family. It is an option, right? So basically, option. Some people call it purchase lease option, as I said, PLO. So let's say we secured a 3-bedroom house somewhere in South Wales. Let's say, for example, somewhere in Port Talbot. We secured this property. We agreed with the owner that we will buy the property at £100,000 in 7 years down the line. So what we will do then, we will take that property off the landlord and rent it out to a normal tenant. Say we rent that property out for 550. Because we are taking that property on a lease option basis, we would have to pay at least £1 to validate the lease option agreement. So usually it would be more than £1 because the landlord or the owner of that property would have a mortgage to pay, or they have some cost that they need to pay for to actually enable that property to actually function. So let's just assume we agree to pay the landlord £200 as an option fee, right? And then obviously we need to put aside maintenance, should we have to maintenance these properties when something goes wrong. Again, that maintenance, we could put about £50. So if we subtract 200 and 250 from £550, which is our rental income, that would generate us £300 a month. Again, £300 would be our net cash flow in a property that we don't own. It's just a property that we have option to buy, by the way. We are not obliged to buy that property come 7 years. We have the option to buy it in 7 years' time. But you and I know that once we've taken that property, we would add value to it. So by the time we hit 7 years, that property may have worth 120,000, because we know in average property prices goes up by 7% a year. I know we are in COVID-19 recession right now. Ignore this year, but in average, during the long term, property prices goes up by 7%. So let's now say we've been able to secure that property and it's generating us £300 a month. So if you times that by 12, that gives us £3,600 a year, right? So if you times that by the 7 years, that property would have generated us £25,000. If you're not seeing my screen, £25,000. The £300 profit we've made here, we times that by 12 months, because 12 months of the year, and we times that by 7, that generates us £25,000. Guess what? That £25,000 is what you would have put down to buy that property, right? So effectively, the rent you've collected here during the 7 years allows you to buy that property. Effectively, you'll be buying that property without putting any of your money down. And the good news is that property would have gone up by 120,000. So you could buy it at 11 o'clock, right? And remortgage at 12 o'clock to get that 20k out. Which means you've got yourself a property that's worth now 120,000, right? And you've generated an equity for the 7 years. And again, I spent a couple of days with my student to go through this strategy in depth and to identify what sort of people this strategy would be suitable for. Okay, and again, this sort of strategy is suitable for an investor. It is an investor strategy, okay? If you are going for a family-let property. So you could do exactly what you've done here. Basically, you do the property up, repairman, do it really nice, and rent it out to a family. And then you just let it run by itself, because you'll have your management agent, or you can manage it yourself, because obviously it's not hard to manage a family property, because whatever goes wrong, you can easily fix it, and you're not managing 5 or 6 tenants in one property. So it's very easy to manage, okay? That's our fourth strategy. And this strategy is for investor. So it is not a job, okay? Right. Let's then look at the fifth strategy. The next strategy is deal sourcing or deal packaging. It's one of my favorite strategies. It's the process by which an investor would go out there, look for below market value deals. It could be a 3-bedroom house, 1-bedroom house, 2-bedroom apartment, land, hotels, whatever it is. You secure that property, you negotiate. Basically, you search for the property, you negotiate, you secure the property, and you sell that information to an investor who is looking for below market deals. So they will then pay you a sourcing fee for giving them that information to allow them to buy that property. The reason why this sort of strategy is very good is because some investors are out there, they don't really have time to go out there and look for deals or negotiate or do all that sort of thing. They just want a package wrapped up for them to buy. Again, this sort of strategy is suitable for someone who do not have enough cash to either go into rent to rent, or to buy a property, or to buy a HMO property. So again, you can use this strategy to raise cash flow. It is suitable for someone who could not get a mortgage, either because they've got a bad credit rating, or they are under the age of 18 and they're not allowed to get a mortgage. Or simply, it's also suitable for someone who's got lots of deals who cannot buy them all. So obviously he can pass the ones that he don't really have money to buy, and then obviously make a fair amount of money from. When I started property, I was giving these properties away. If I got a deal, I don't have enough money. Instead of actually sourcing it on, I was just giving it to people. I did not know I would make money out of it. But again, when I went out there, learn about that strategy, I realized I was losing about £2,000 to £3,000 a deal. So since I realized that, now whatever deal I have, if I cannot buy it or if I cannot rent it, I push it onto investors who are out there ready to buy it. Again, it's very straightforward. You could go on Rightmove, Zoopla, or you could do leaflet drops, whatever you could do to attract the people who are likely to allow you to secure these sort of deals. Again, it's very important for you to let people know about what sort of deals you are looking for. Let the agents know about what sort of deals you're looking for. Let the investors know you're out there looking for below market deals. Again, when those deals comes, you can then push it on to your investors. So it's a very, very good way to quit your job immediately. This property strategy, you don't even need cash to start. All you need to do is a train ticket. All you need to have is a train ticket that will take you to your gold mine where you're sourcing these properties. Alternatively, if you have a car, then you can make it even easier. All you need to get fuel in your car and drive straight to wherever you're going to go and view this property, source them, secure them, and push them onto your investors. And again, with this sort of strategy, deal sourcing, you could make anywhere from £2,000 to £3,000 sourcing and securing 3 to 4 bedroom houses. Okay, tell me, lots of us here, we only need that amount of money to be financially free or to quit our job and concentrate in property full time. Again, it's a very good strategy. I love it. If I'd known it when I started, I would have gone for it. All the deals I lost by giving it away, I would have been making lots of money through that way. So again, it's one of the strategies that you could use to actually get you from the rat race to controlling your own future. Again, this sort of strategy is a job. Okay, it is not an investment because you have to go out there, look for these deals, view the properties, analyze the deals, push it onto your investors to sell. You'd have to be doing that all the time for you to be able to generate that amount of money. Let's just assume you secure only 2 deals a month, right? So you're making £4,000 a month. If we times that by 12, that would give us £48,000. So you only need to secure and sell 2 deals a month and you could generate £48,000. So guess what? Once you generate that £48,000, you've now got option to either invest in buy to let, invest in HMO, or take up a lease option agreement, or if you don't want to spend all that money, you take up a rent-to-rent strategy. Again, it's about knowing what strategy is suitable for you based on your financial situation as well as your experience. Again, this is just a brief on how to execute these strategies. My courses, we go in depth in deal sourcing. We tell you where to look for these deals, how to negotiate the deals, how to wrap the deals, how to secure investors, how to secure people who are selling these properties, and again, what are the legality that you need to understand before you actually establish your own deal sourcing company. Again, if you come to the advanced course, I will go through all that. I will go through all that to ensure that you are set and ready to actually push these deals on. And again, with our mastermind group, we actually help you sell the deals ourselves. Say, for example, you did not set up your company. You can go out there, secure these deals on our behalf. We can help you push it until you raise enough cash flow. Then you can then set up your own company and start selling these deals yourselves. So let's go on to the 6th property strategy. Okay, let's talk about holiday let. Holiday let is when investors buy a property where people go on holiday. Places like Devon, Scarborough, Brighton, Hastings, Bournemouth, or anywhere that is attractive by tourists. Places like Snowdonia, for example. So you can buy a house there. It could be anywhere from 4 to 8 bedrooms, and then do it up, right? And put it on as a holiday let for families who wants to holiday within the UK. We all know now, due to COVID-19 or the restrictions we have right now in traveling, people who want a holiday within the UK, and also it saves them lots of money to holiday within the UK instead of traveling abroad. So let's look at this. Let's just assume that we've invested some money in buying a property in Snowdonia, for example. Let's have a look at the graph. It's a very, very interesting way of making money works a lot harder. So again, if you bought 3 to 4 bedroom house, it will sleep at least 8 to 10 people. Let's say 1, 2, 3, 4, 5, 6, 7, 8 people, right? The good thing about holiday lets, the more people you have in your property, the more return you have. Let's say you have 8 people there. That's how the graph goes. And then it just shoots up like that. So because the more people you've got there, the higher return on your investment. And basically, if we've invested 50,000 to buy this property, 25,000 pounds to refurbish the property, that cost us about 75,000. And this sort of property will generate us about 55,000 pounds rental income. Obviously, we did not just get this rental income as easily. We use marketing companies that enables us to attract the sort of guests that will pay us that amount. So we usually pay them about 20%, which is 11,000. And then obviously we have repair and maintenance, the cost of cleaning the property when the guest checks in and checks out. And if anything goes wrong, and obviously we have a hot tub there, and if anything goes wrong with that hot tub, we would always have to fix that. Again, we've budgeted about 11,000 for that one as well. So this property would generate us circa 30,000 pounds a year. 30,000 pounds in 75,000 investment. That's a very, very good return on investment. Again, the good thing about this now, holiday let is booming because people want to holiday within the UK because it's really, really cheap. They will take their children, their parent, their grandparents, cousins and uncles. Everybody will go and live in that property because that 4-bedroom property could easily sleep about 8 to 10 people. Again, that is what generates us that amount of money. If we were to when we use our marketing strategy. As you can see, it's a very good way to generate income in property. Again, some people would call this sort of strategy a job, but for me, I don't call it a job because if you join me in my mastermind or in my courses, I will train you how to systemize this sort of strategy to ensure that it works with and without you. So you don't need to really get involved. And again, you only maybe need an hour or 30 minutes to actually sort out some certain stuff to allow that process to go smoothly. All you need to do basically is to watch your phone and see the bookings coming in and you're generating that amount of money. Again, this is just an insight on how this sort of strategy works. Again, we will spend a couple of days or so to go in depth in this strategy and to tell you which areas this sort of strategy works. It doesn't work anywhere. It works in certain areas, and in those areas, it has to be in a certain specific sort of area as well for you to be able to make that sort of amount of money. Again, if you're interested in this sort of strategy, let us know. We're happy to talk you through that. Okay, and again, this sort of strategy, I would say it's an investor strategy. As long as you use the automation to get that to work, you don't have to put any time in it. It will self-run. Okay, perhaps some people will not call joint venture a strategy, but I call it a strategy because this is a strategy that allows you to execute all this strategy. It allows you to do buy-to-let, HMO, rent-to-rent option, and holiday let. Because if you, for example, you have an amazing property, buy-to-let property, it's an amazing deal, and you know if you've done that deal, you'll be able to pull all the investment back out, or some of the investment back, or you got really, really good cash flow, but you don't have the money. So what you do, you will find someone who is cash rich, right? But do not have experience. So you would have gone to my course and you know exactly how to execute one of those strategies or a couple of the strategies. You can go and tell them, listen, I've done this course. I know exactly what to do. I've seen this property. All I need basically is for you to invest with me to execute any of these strategies. Say you've secured a property that you could convert into HMO. All you need to do is to go to that person who's got the money, who hasn't got experience, tell them, about the strategy, about the deal, where the property is, what is the potential of the property, how much cash flow that property will generate, and what is the net profit, and then obviously what sort of share you would like to have shared between you two. And then you can discuss that among yourself, and then he would put in the money, right? Because you've got experience, and you will do all the work, managing the refurbishment work, getting the property ready to be let out, managing the tenants, drafting the tenancy agreement, any issues with repair and maintenance, you'll be looking after that for a profit share of the one who put that money, who hasn't got experience. That is one of the ways that you could build your property portfolio in a very short period of time. And again, it's the best way for you to let people know what you do as well. So if you work with one investor, use that investor as an example whenever you're doing presentations, or whenever you are out there, they're asking you to introduce yourself, talk about what you're looking for. And again, that's the way you can attract these people to allow you to execute this strategy. Okay. So we've gone through all these strategies. We've gone through buy to let, we've gone through HMO, rent to rent, we've gone through option, deal sourcing, which is a fantastic strategy. Holiday let can get you financially free in no time. And obviously joint venture, you could use joint venture to work with people to enable you to build your cash flow. As I said, this strategy I've just discussed with you is just an insight of what you could do to allow you to get to the level you want to get to. So once you know one of the strategies, you can then set your goals and set yourself a target to take you to where you want to go. Again, I'm running courses in each and every individual strategy here. We go in depth on what you need to do, how to structure these deals, or how to secure these deals. We have our golden rules we go through. We ensure that before you leave that room, you know exactly what you need to do and what you need to do to actually execute these sort of strategies. Again, thank you so much for listening to this video. I really look forward to seeing you in one of these courses, or advancing yourself a lot more to execute one of those strategies. Thank you.